Imagine scrolling X late at night, seeing Bitcoin surge 20% in hours, and that pit in your stomach hits. What if I miss the next big run? That's crypto FOMO in 2025, the fear that's already cost retail investors billions in bad buys. In this behavioral finance guide to crypto FOMO 2025, we'll unpack why 68% of decisions stem from hype, not fundamentals, turning excitement into expensive regrets. Take Sarah's story. She FOMO bought ETH at peak 2024, watched it dip 30% and sold in panic, missing the rebound that could have doubled her stack. Sound familiar? Ever notice a 5% crypto drop feels like your portfolio's on fire? That's loss aversion bias. Losses sting twice as hard as gains feel good, per behavioral finance research. In 2025's volatile markets, this bias triggers panic selling regrets, with studies showing 37% average losses from emotional exits during corrections. Remember Alex? He held through a dip but sold at the bottom, regretting it as prices rebounded. A classic trap. How do you spot it in yourself? Social media buzzes with to-the-moon posts and suddenly everyone's buying. That's herding, where FOMO turns you into the crowd's tail, not the head. Behavioral finance shows herding amplified the Pengu token's 480% July 2025 surge, only for panic to crash at 28.5%. Retail regrets piled up fast. One trader followed the herd into a meme coin hype, sold in the stampede, and lost 40%. What's your herd blind spot? Share below. After a winning trade, you think, I've got this, and double down. Overconfidence bias, fooling 70% of crypto traders into bigger risks. In this guide to avoiding panic selling regrets, recall how overconfidence fueled 2024's altcoin bubbles, bursting into 50% drawdowns for the bold. Mike nailed a call once and bet the farm next time, wiping out gains. Overconfidence or hubris? What's your win story turning sour? Staring at a mist green candle, regret whispers, you should have bought. Aversion bias keeps you frozen, amplifying FOMO's grip. Research reveals regret drives 40% of crypto inaction, leading to bigger missed opportunities than actual losses ever could. Lisa skipped a dip buy from regret of a past loss. Watched it 3x. What's haunting your trades? Hit comment with your ghost story. Ready for hacks? Start journaling. Log entry, emotion, outcome. It's your behavioral finance mirror to spot FOMO patterns early. Traders who journal cut emotional trades by 50%, turning regrets into repeatable wins in 2025's chaos. One user journaled a FOMO buy, learned and avoided a 2K loss next time. Simple, but game-changing. Try it this week. Rule number 1, risk only 1% per trade. This crushes greed, forcing discipline over psychological biases in crypto trading. With stop losses and alerts, you automate away 60% of panic decisions, per 2025 studies on emotional trading. Tom set a 1% rule after a wipeout, saved his stack during a flash crash. Rules over reactions. What's your first rule? When hype screams buy, ask, where's the fear? Contrarian plays beat herding, spotting bottoms before the crowd. Behavioral insights show contrarians capture 2x rebounds, avoiding the 28% average FOMO crash like Pengu's. A dev turned bearish posts into buys, 3x'd his portfolio, flipped the script. What's one contrarian move you're eyeing? Wrap it up. Master these, journal, rules, contrarian. And 2025 becomes your year, not FOMO's. Behavioral finance isn't theory, it's your edge. Avoid panic selling regrets by starting small. Pick one hack today. Your future self and wallet will thank you. What's your biggest crypto regret so far? Comment below. Let's learn together. Subscribe for more behavioral hacks, and like if this sparked a plan. See you in the next dip. Buy low.